Good morning, everybody. Let's get a quick audio and video check in for our morning show, Charts and Coffee with Raghee. Good to have you all here. Happy Tuesday, everybody. All right, so good morning, good morning. Happy Tuesday. Good to see you all. 5x5, love it, love it. Hey there. Okay, so let's get to it. So in the next 20 minutes, we're going to cover the things that are on my radar, not only for longer term, but also for this morning. This will be the first morning since Wednesday that I'm actually looking to do any kind of morning day trading. I took last week really light. I think it would really behoove a lot of folks to just acknowledge that some weeks are not going to be ideal for active trading and even just spend some time with those people we call friends and family. Go find them. Where are they when we've locked ourselves up in our trading caves? But anyway, good morning, good morning. So there we go. All right, let's get to it. So I've got natty gas up on the charts right now. This is a market that I am long in via UNG calls. Nothing's changed there. So that's pretty much been status quo. And yeah, I'm waiting for the market to move higher, basically through 3.0. For those of you that have been following this natty gas oversold bounce entry with me, just waiting for natty to just break some near-term resistance levels. The levels that I'm looking at right here are right around 3.0. I mean, those are some important volume. Those are some important volume levels. So I'll be keeping an eye on that. All right, so what else do we have here? Let's jump on over to, I'm still getting a lot of questions on gold. I get it, but I cannot recommend enough that it really does make sense. I mean, look at what gold did, right? Gold's going to be volatile for a little while. Don't worry about the move higher suddenly today. That is a minor low that we have put in. Just don't short gold. That's my longer term conversation. Just don't short gold and don't chase it up here either. I'm not here showing you gold because I want you guys to look at this move that we've seen where gold is launched off 1778 and it's up at 1817. This is not what I would recommend chasing. What I'm really recommending is let gold simmer down in this area. There will be another chance to get into gold. If this is gold's move higher, we will have a pattern that emerges. Please don't chase it here. So this is more of a public service announcement discussion of gold here. All right. So the next thing I want to take a look at, of course, are our four major averages. One of the things that I talked about in the free and in the premium video yesterday was the fact that, look, gang, since election day, since that Tuesday, we have crossed higher through certain key volume weighted average prices. We haven't had bearish, open to short type approaches in the indices since the beginning of November. And as we come now into the beginning of December, and happy December, everybody, we still are very much a bullish buy. So please don't subscribe to the whole, well, the market's gone too far or the market's due for a correction. Let other people pick tops, gang. Take advantage of the retracements, because if you're so focused on which high is the one that you're going to short, you're not typically, some people have this superpower. They have this mental transmission that could shift gears very quickly. Most do not. So what I'll say is most of us do pretty well focusing on the side of the market that we would prefer to engage in. And that's where I'm going to keep coming back to, hey, let's keep an eye on some shallower retracements at, say, the 13 exponential or the 21 exponential moving average. So those are setups that you'll see on Dow, IYT, S&P, futures, and the ETFs. Let's keep that bullish directional bias. It's worked really, really well. Now, the menu that you see populating on the right side of these TradeStation charts is a cool plugin, and I make this available to members. It's something that TradeStation's had available for some time. And what it is it's very cool. It shows you point values. It shows you which exchange the market trades on. It shows you the initial margin rates, day trading rates. But I love this part, the second tab. And I know it's very, very small. But the second tab shows you volume and open interest. This is how you track what the front month is. And for those of you that are wondering, saying, Rock, I'm kind of interested in this futures thing, but what's with the rollover and which contract do I trade? Follow the volume and open interest. Follow the open interest if you're trading longer term time frames. Follow the volume if you're day trading, and you'll be fine. It's really that simple. It doesn't have to be that complicated. And by the way, a good brokerage will tell you, hey, this is the front month. This is where you need to be, day trading in terms of those short-term liquidity issues that you might run into if you go further out in a contract. So that's where a good broker is very, very helpful. All right, so crude oil has been another topic. OPEC's meeting. There's been talk about extending the production cuts, and likely that is what's going to happen. Because quite frankly, if that does not happen, we'll probably see crude head much lower. Crude is a buy if we can pull back to approximately 42.25. So crude is a buy if we can pull back to 42.25. It's a very new, very fresh uptrend. Double green, 8, 13, 21, and 34 period exponential moving averages are indicating that the path of least resistance will be up. And if I can buy a pullback, I'm right as rain. That's exactly what I want. All right, so next up, let's see, what requests do we have coming in? Spend time with who? It's funny. It's so easy to become a trading hermit. I get it. Been there, still sometimes do that. Yeah, I totally get it. Professor Raghee. That makes me laugh. All right. Cyber Tuesday, it's Cyber Monday and it's Cyber Tuesday, or is it just now a Cyber Week of shop till you drop? Yeah, I'm okay with that too. All right, let's see. Hey there. I hope sorry if I'm going to mispronounce your name, which I totally am, but as a Raghee, I totally get it. Kiatun? Oh gosh, please give me a phonetic. I would love to be able to pronounce that. It's a very cool name, by the way. Sonic R. You know what? I have heard of Sonic R. I think I saw some of your work, my friend, and thank you. I'm honored on Forex Factory. So thank you very much. I appreciate it. Look, I've always made almost everything I do open source, openly available. So if you've taken some of that, made it your own, and you're successful with it, sincerely, nothing makes me happier. That's fantastic. No, thank you for sharing that with me. And I am familiar with, I think, some of your work. So that's awesome. Thanks for finding your way over to our Charts and Coffee show. GameStop. All right, so we got a question about GameStop. Gang, I do not like parabolic markets. I really don't. I think that generally speaking, once something dips below 20, it's interesting in a different way. Gosh. So Red King, when I have a stock, so a couple things to think about. When I have a stock that's below 20, and I think you'll appreciate this, because when a stock is below that, it's just on a different set of radars, different types of traders and different types of participating. You'll see this kind of movement. All right. Charles Dow would call that accumulation. All right. Charles Dow would call that accumulation. This is usually lower volume. Okay. Lower volume. And you'll see a defined range. When we start to break out of that range, and if you can find the volume increasing, and if you can find, in this case, see the propulsion dot started lighting up, the green grab candle started lighting up, little corrective dip in that very fresh uptrend after we've broken out of this accumulation range. What it usually will do is set us up for a launch. markets that are under 20 bucks tend to do this and that, and then sometimes that again, and then that, and then that, right? That's kind of what they do. And you can see that's exactly what this one is doing. These are corrective buys. These are pullbacks, right? That's a pullback. And then we end up with that consolidation again, and then it launches. So I don't apply the same type of approach to something that is under 20 bucks as opposed to something that's over 20 bucks. The psychology, the patterns, the behavior is very, I think, different. And I think volume becomes much more an important component in identifying accumulation. So in this situation, yeah, I need a pullback before I can do anything. But I do anticipate there being some resistance around 20. Maybe the market moves lower, but it's a very different type of behavior. Once the market starts doing things like this, it gets very tricky. Where you want to catch these things, if you're doing scans, are for these sub $20 stocks that have this kind of look. And you're very patient and you wait for that momentum breakout. All right. So that's the way I look at it. If not, you're actually just trading momentum, which is fine. It's a different kind of trading, but you're really focused on momentum. And I think volume is going to be very, very, very important in that regard. All right. Etsy. Do I like Etsy? Probably not as much as I like some of the ETFs that have Etsy. It's moving higher. That's great. It's on a trend, gang. Is it a market that's moving higher? Yes. So let me put it this way. If you buy on these candles, you're playing, and this is not any knock to anybody, just is what it's called. It's called greater fool theory. All right. That means that hopefully you've got some volume here as the market's moving higher. And we're breaking different resistance levels with high volume confirmation. However, if there's not somebody up here that's willing to buy at an even higher price, you're stuck holding the bag. So be very careful with these kinds of moves. You've got to be very nimble. You're really strictly playing momentum. This is not a trend to me, so this is not a buy the dip type market. Now, I will also say this is not my necessarily kind of trading. So yeah, I hope that it moves higher for folks who bought up near these highs, and no doubt there are folks who bought near these highs around 160, but that's not the way I play. So it's not that you can't swing at this pitch. It's just not my pitch. I don't like momentum trading as a general rule. I feel it leaves me quite vulnerable to just a collapse of interest. Granted, this is not a sub $20 stock, and I would treat this more as an overbought, oversold environment, but I certainly wouldn't short it. So I don't like Etsy in this current environment. I don't like Shop. And the reason I bring that up is, again, there are plenty of markets that are moving higher with better structure. Most things in the XLF, most things in the semiconductors, SMH, a lot of bullishness in the broader indices. So what I would say in that regard is, look, we can focus on choppy markets that have suddenly had momentum moves, or we could focus on double green bullish markets that are continuing to follow along their path of least resistance. And if you found that between May and September, personally, you did quite well, and this is for everyone to look at individually, then that was a double green environment where momentum breakouts on volume confirmation and pullback buys all worked fantastic. So look back on that chunk of time from this year and ask yourself, how did I perform through May, June, July, August, and into, say, the first half of September? And if you found that by and large you did pretty well, chances are you were dealing with a pretty significant uptrend, pretty steady uptrend, I should say, and high volume breakouts, momentum trades, and pullback buys work really well in that environment. So if you've done well in that environment, seek out other markets that are behaving like the overall stock market did in summer. And there are pockets of that in this, as we're going into December. All right. So, we need to get some t-shirts made, some rise and grind charts and coffee t-shirts made. I love that. All right. Next question is, hey, Raghee, could you say the name of the two trading journaling sites? Trademetria? Oh, sure. Dorothy, it is wingmantracker.com, and there's a discount code, and that is simpler trading. Okay, Wingman Tracker. And the other one that I use, you got it, is Trademetria. Again, I know there's a lot of them out there. Those just happen to be the two that I use and pay for. All right. Yeah, so Momo moves are certainly going to give us some green grab candles occasionally, but it's going to be the culmination of momentum that eventually turns into a trend. Might we get there? We could. Is it there now? Afraid not. Yeah, we could get there, but we're not there yet. We're not there yet, my friends. And I don't mind. I don't mind waiting for that to develop. Netflix is going to be a similar situation. Netflix, I would say, though, I wouldn't mind buying. Here, let me show you here what I would think about doing. Darvis levels, thank you very much for automating my support and resistance. That zone right in here, that's a buyable oversold zone to me. I don't want to short Netflix. I look at the trend that preceded the chop. This chop's been in place since July, though. Please keep that in mind. This is not new, fresh, choppy action. However, look at this zone, Darvis levels showing me where the support is. We're still trading above this 200 exponential, which is really bullish and important. The trend that was bullish. So I have bullish bias. And so, yeah, every time we dip into this zone, I think that's a spot you could buy some calls at, or at least leg into a call vertical. I think that works. Netflix being as expensive as it is, I think some folks would prefer to go put credit spread. That's fine. Make sure you get a sell off into that zone that I've highlighted. If you want to put on a put credit spread, in other words, sell premium. And if not, I'm a little bit more directional. I'll go with the long calls and I'll leg into a call vertical most often. All right. What are my thoughts on CML and TradeStation? Or I don't know if you mean CML trade. You mean those two different softwares? I've used CML Biz. I don't use it frequently, but it is one of the tools in my arsenal. In TradeStation, I've been using super charts. That's how long I've been using different TradeStation charts. For those of you that have been around a few decades, I was using super charts in the 90s. So I'm a big fan of TradeStation. I'm a big fan of the platform. I like the feed. It's a very steady platform for me. I'm on TradeStation 10. And as far as a brokerage goes, yeah, I'm a fan. Absolutely. I'm a fan of both. Yeah. Now, all my cards on the table, I used to be the chief currency analyst for TradeStation some time ago, but my professional relationship with TradeStation was preceded by, almost 2 decades of actually using their charting products, so their platforms. So yeah, I'm a fan. Peloton, the work from home narrative is tricky. I'll be straight up. I think Peloton's a great trading name. I think Peloton was not going to be trading at $130 had we not had lockdown. I think that what Peloton was doing back in February and March was preceding a move to below $20. Peloton was the right product for the right time. It's not a product that I think stands a test of time if people don't change their gym going behavior. So I'm talking about short-term trading versus longer-term buy and hold. I got to tell you, I'm probably pretty biased. I wasn't a fan to begin with. So did I trade it on the way up? Yeah, because I could care less, really, in many ways, when I'm trading what the symbol in the upper left-hand corner is. But now Peloton's in chop. So this is a great place to kind of end our conversation, because I'm going to head over into the futures room now. But that right in there, that's where the market stopped trending. Right in here, in this area here, we started trending in this area here. This behavior is very different than what we have now. Don't look at Peloton and say, well, I know what I did between May and October. Different market now. I'd still be bullish because the trend that preceded the chop is up. But I'm not a fan of chop, generally speaking, if I can go find trending markets. And I'm not a huge fan of a buy and hold in Peloton. I could be wrong. I think it just benefited from a very specific psychology. If that behavior is a permanent change, we'll see. Or a lot of people are going to be trying to unload their very expensive stationary bicycles. All right, gang. I got to get going over to the futures room. So I will see you all tomorrow at 9 a.m. Thank you, as always, for joining me. I really appreciate it. As far as some of the indicators that I use, we will probably on a Friday kind of take a step back and do some specific indicator breakdowns where you can get the indicators. Most of the indicators, not all, but most of the indicators on my chart are free, and I'll talk about where you guys can pick that up from. In the meanwhile, you can check out Raghee's Ultimate Toolkit.com without the www, and a lot of those, it's totally free, gang. Raghee's Ultimate Toolkit.com, and there's a document there, right? There's a document there, and at the end of the document, there are a few links as to where to pick up some of these tools. Okay? All right, I'll see you tomorrow. Be good to each other, gang.